infrastructure investment is widely still recognized as a crucial driver for economic development, but quality infrastructure in much of Sub Saharan Africa still lags. To dissect this, I'm now joined in the studio by a panel of experts. Mr. Zodwa Mbele, Group Executive for Transacting at DBSA. Right next to her, we have Mr. Kasekende, who is with the Standard Bank, that's a Standard Chartered Bank rather. Right next to him, we have Mike Wylie, who is the chairman of WBHO, and it's also been announced that they do have operations now in Zambia. And to my extreme right, we have Ms. Lizeka Matshekga, who is Agro and Infrastructure and at the IDC, that's Infrastructure and New Industries. Just for some clarity, Mr. Herman Kasekende is the Managing Director and the CEO at the Standard Chartered Bank, Zambia. Let's start this off with Ms. Zodwa to my just to my right. It's very interesting. Many a times we do go on about infrastructure, the role of infrastructure, but financing is just crippling this conversation. Let's just start there. Where do you see the likes of the DBSA actually fostering this particular conversation?
Thank you very much for inviting us, and thank you for receiving us, and just for DBSA to share the experience. As you know, that we have always been a DFI that has been focusing on infrastructure development across SADC, but in the past couple of years also extended our mandate beyond SADC region. Look, I mean, it is important to understand that it's not always easy to fund infrastructure, especially the infrastructure that is not linked to the economic activities. And by that infrastructure, I'm referring to the social infrastructure, what we have defined as DBSA, the social infrastructure, where you look at the health-related infrastructure, education-related infrastructure, human settlement, essentially infrastructure that is linked to the quality of life. Now, there's always a mismatch because the nature of it is that it's not linked to economic activity. As a result of that, how are you going to repay for such infrastructure? So what DBSA has done in respect of that, we have become very much innovative, coming up with a funding solution where we could, for instance, if in the case of the student accommodation, where we provide funding on the back of the NAFSA's budgetary allocation, which will come over a longer period of time. As you would appreciate, you know, government or universities cannot roll out infrastructure on a piecemeal basis while waiting for the budget to come to be complete. So DBSA bridged that timing difference between the infrastructure requirement and the time that the infrastructure would be delivered by such institutions. And we've used that model. It has worked. Similarly to the, as well to the municipalities, we've used the same, what you call the front loading. Again, if you look at the municipalities, the rapid urbanization, it's at a high speed such that we cannot cope with the infrastructure that is required to sustain, such urbanization. Again, in the DBSA, kind of try to augment the MIG grants, the grants that are allocated to the municipality by, again, we front load on the back of those future grants to be allocated so that the infrastructure rollout can be accelerated, not to wait for budgetary constraints. So that's how we go around it.
Right, it's very interesting you do touch the social aspect when it comes to this conversation around infrastructure. Herman, let me bring you into the conversation here, because I'm thinking Standard Chartered, it gets a bit complicated if there's a social infrastructure here, as opposed to our traditional understanding of infrastructure investment, hard stuff, railways and roads, and just give us a sense of where you stand in this particular position.
Thank you, and thanks for hosting us today. We have participated as key partners to the government of Zambia, the Republic of Zambia, over the number of years. We've been in Zambia as Standard Chartered Bank for more than 110 years. We've actually taken up the mantle and assisted the government mainly in attracting private capital into the development of what you would call the social infrastructure. This has spanned the entire spectrum from health in terms of investing in hospitals, into roads, and quite a number of projects that have been taken up, but also water reticulation in several parts in Zambia. But most importantly, we've been key partners in terms of investments into the energy infrastructure. And this involves transmission, but also the dam projects that are taking place. So we think that Zambia has got actually potential to become the energy hub for Southern Africa. But this will require a lot of investments. As is known, the government cannot cope with the kind of infrastructure, financing that is required to go into infrastructure. So what we think that the government has got to do, working with the private sector, is to complete the reforms that are necessary so that more investments can come into the energy sector, but also making sure that there's more distribution of the infrastructure across the entire country so that the demand is actually raised. So we've participated into the transmission, but we also think that as a hub, as a potential hub for energy, there's need to invest into interconnectors, which could then tap into the East Africa power pools, but also the Southern African one. So where then Zambia could actually supply the surplus of energy, because they will soon actually bring on board about 1,000 megawatts when the Kafue Gorge is completed and the Mamba Collar is also extended. So that will require then a willing power and then tapping into the other energy hubs.
You've touched on the dam and the energy gap that we do have on the continent. We'll definitely be touching that later on in the show. Mike, let me just bring you in here. WBHO has made an entry into much of Zambia now. And this is a very interesting time, you know, South Africa in a technical recession as it is, and you moving across the border. Just give me a sense of what Zambia presents.
Arnold, thank you for inviting me. We've been in Africa for the last 20 years. So it's not just in Zambia now, we work throughout Africa, mainly in West Africa. In fact, we've just built a very nice commercial building for you, Herman, for Standard Charter in Ghana. So we work and obviously we work in Zambia, DRC, and Zimbabwe, and then all the Southern African countries. So, and it's not just WBHO, there are other South African companies working there, and of course there are a lot of companies from France and Spain. So I think that, you know, the construction is very clear to me that the provision of good quality infrastructure into these countries is a powerful tool for poverty alleviation. It has a very positive effect on growth. And probably the most important, it has a very negative effect on income inequality. So this Gini coefficient improves hugely as soon as there's infrastructure. Productivity increases. So the construction industry is a wonderful asset. And I must just say, you know, you hear the Cameroon saying we can't do the job, you know, we can't build those stadiums, or we're not going to finish them in time. So that didn't happen in South Africa. South Africa has a wonderful construction industry. A little bit in financial disarray at the moment, but it's still there. And that's why they've obviously the first port of call would have been South Africa, because we have fantastic stadiums here, built at extremely good value, all finished on time, wonderful quality. And so I think South Africa is in a good place in providing this, playing a role in providing this infrastructure into Africa, and of course looking after ourselves, which I think with our service delivery problems is even more important.
Lizeka, a very fascinating title here, Agro infrastructure person. And for a continent that is employing, the agro space is employing, over 70% of population, one might argue that this should actually be a core pillar and a core a significant investment avenue because it is employing a lot of Africans. Just give me a sense of what you think the priority should be if one is actually investing in agriculture infrastructure.
Sure. Okay, thank you so much, and thanks for having the IDC to your show. Maybe just to start, IDC has 3 value chains, which is it's based on the South African positioning, be it from the inputs or the market. So we are a commodities country, so we have the metals and mining, we've got the agriculture, and then lastly we've got the chemicals. So IDC then, we asked ourselves what could limit those sectors to actually grow, and infrastructure was then the catalyst. So for us as IDC, unlike DBSA, we don't do the social infrastructure. So we purely do what we call industrial or economic infrastructure. So if I were to answer you, if you look at the agriculture, it's important that they've got access to roads, to storage, be it silo storages, cold storages, packing houses, as well as the dams for irrigation. So there's a perfect link. We know what it means to have a reliable infrastructure. It actually unlock the industrial development opportunities. So for us, we believe that the IDC, we have to go beyond just South Africa in order to also access new markets. I think it's been said that our economy is strained, so what does then it mean? We have to go beyond the borders, but I think without infrastructure, you're actually unable to do that. So we have to put infrastructure first and let the industry follow suit. And that's really our approach. We've got projects in Zambia, Mamba, we're part of it. We've got projects in Mozambique in energy. We know what energy means for the economic growth.
Right, Zodwa, let me just bring it back to you. If we were to look at the World Bank statistics between 2009 and 2015, infrastructure investment as a percentage of GDP for much of Sub-Saharan Africa was just at, what, 2%? And I'm sitting back and I'm thinking, if you're sitting down with many of these leaders and maybe treasury ministers and finance ministers, and the investment going earmarked for infrastructure investment is just 2%, how much pressure are you under to deliver if governments themselves are actually not coming to the table?
I'm not sure about the pressure per se, but there's a need and there's a commitment. And there's a desire, I guess also from the politician, it is a desire to have that infrastructure. But it's incumbent upon institutions like the DFIs who would need to come up with the solutions. Because remember, politicians are just politicians. We are the technocrats who need to come up with the funding solutions for every headache. And we go with what is topical. If you look at, for instance, in the case of the student accommodation that I've indicated to you, we have to come up with innovative solution on how we fund that. We can't just have the country which is burning in a particular sector and fold our arms. And similarly, if you see what is happening at the Val River system of what is happening, the pollution that is happening there, DBSA is part and parcel of the solution that is being deployed there. So it's, you know, we can't just go with a political mindset into it and become talk shops. We need to play a different role of being a very catalytic role that we are meant and we are cut out to do. And we just need to be constantly innovative in how we fund different technologies. You've seen with the IPPs, and it's not only the social part of it, also commercially, because we also need to sustain the bank. We need to look at what is economically viable as well as what is not viable. But at the end of the day, we don't have to go with a cap in hand to beg from government. So we need to find a balance that. IPPs were the great example where DBSA was involved throughout the rounds. And it's good projects. They are economically viable. They are sustaining the bank. And other projects that we can mention, I mean, Zambia in particular, we are exposed to Zambia. By the way, 50% of our exposure outside SA is with Zambia. Zambia, 50%, yeah, we have heavily invested in the energy sector in particular, all the projects that have been mentioned, ZESCO, Mamba, Colliery, and other IPPs which are dependent on ZESCO. So really, it's all about coming up with what is innovative. Lately, we are also, perhaps something that you might also be aware of, DBSA is also a subscriber to some of the global climate facilities, which can assist to blend certain projects and make them affordable. You know, so we really need to forever constantly think how best we fund technologies that are coming our way and find solutions to social infrastructure, which is ordinarily would not be fundable with a commercial funding, if you like to call it that
Lizeka, you could just
maybe can I add to that? We are sister companies, but we're talking on establishing, for example, early project prep fund, because the biggest challenge is viable projects. Projects are plenty. I think we don't have an issue, but are they viable? Are they ready? So it's for us to actually partner and put up those risk capital to actually expedite. But what I wanted to add is to the private sector as well, especially construction companies in South Africa. Ordinarily in the past, they'll be interested purely being an EPC. I think now we've learned that if you operate outside South Africa, you also have to take some risk. So how do we then leverage and actually share the risk? I think my plea would be to also the private sector to start looking at projects outside South Africa differently because the conditions are dynamic.
I just want to pitch in that particular one and bring Mike in, because I'm thinking if you're exposed to this many countries, definitely not all the countries are as transparent and predictable as South Africa of this world, and you have to de-risk much of this stuff before you enter many of these markets. And what informs your decision here before you enter some of these countries? It's not like you're going to get a government guarantee before you enter there.
Unfortunately, a lot of the work going on in Africa is for private companies, mainly mining companies, and there's no problem with payment. So as soon as we move into the government sector, there is risk mitigation factors that we have to take into account to build. And we're looking at quite a number of projects in Kenya, big road projects, and Tanzania, and then of course your Northwest Rail, maybe going all the way through Angola to Benguela. So, and all that will be done, and I'm sure in conjunction with DBSA and yourselves, to make sure that we do have a bankable project that doesn't put anybody under undue risk. So we're happy to take risk, and we're happy to put our balance sheet behind these jobs, but everybody else has got to come to the party, and it's got to make sense. And if it does, and as you were saying, there are so many bankable, and there's so many projects out there in Africa, a lot of bankable projects, but the problem is funding. And so one's got to prioritize which ones are really necessary, and I think we've all got to apply our minds and maybe get a bit more coordinated to actually go and at least do something, and not do such a little, as you say, it's 2% GDP on a very low GDP in the first place. So it's not good at all out there.
Herman, I just want to, before we go for a break, I just want to get your thoughts on this, because you're in a very tough spot, if you ask me, because on one end, there's a government that are saying, you know what, we want to partner with you, and on the other end, this investment of 2%, it's just meager, to say the least, and non-performing loans are also really going up. Some countries are in recessions. There was a commodity depression just the other day. And how do you really, there's risk, yes, but there's also default on the other hand. How do you balance this?
Oh, quite interesting, actually. I think we, like I said at the beginning, that we are key partners to the government, especially in Africa, in recognition of the challenge for financing infrastructure. I think our key role has been, especially in Zambia, it's been crowding in investments. So we take the initial risk, we do the assessments because of our knowledge, because of our experience in terms of navigating the terrain. We do understand what's going on in the country. We are ratings advisor for the government of Zambia. So our role is then to crowd in the investments from other pools, but also what Mike talked about in terms of the risk mitigation, the mitigating factors. How can we then make this a lot more attractive? Because traditionally, you wouldn't want many of the participants in the international capital debt markets would not want to put money into infrastructure. So it's the packaging, it's the risk mitigation, but also in them understanding what is important for the country. And that we've actually done all across through Power Africa, and then we've done roads. And also there is a recent project in Lusaka in terms of the Lusaka decongestion. So we did attract investments, and this is being done by an Indian contractor. So we participate in the projects, we have a take and hold, but then sell down part of the risk to other participants.
Welcome back to Power South Africa with me, Arnold Segawa, going on about infrastructure, or the lack of, for that particular matter. Remember, you can join the conversation via Twitter at CNBC Africa. I'm joined by a panel of esteemed analysts, if you ask me, and we're still touching this conversation around infrastructure and the gap that we do have on the continent. Just before we came back, we're actually going on about the credit profile, or maybe even the balance sheet, and how not so many corporate bonds are being issued north of South Africa, and the lack of capital markets really for away from South Africa really is just baffling. You know, Lizeka, maybe you want to touch more on this.
I think it talks to the lack of financial systems, some of it, probably most of it, that's the reason. But I don't think it's actually a big challenge, because we still see a lot of interest in DFIs, in private capital to actually fund infrastructure. What is key is to ensure that we've got credence in those state-owned entities that are providing either PPAs or offtakes. And it's about policy certainty as well. It's about the issue of politics, the stability. So I don't think it's really limiting per se, because capital is available, but as we said earlier on, the readiness of the projects or the quality of what we see. And I think I can never stress enough the issue of certainty, because investors want to actually be certain that they could actually take their money out when the project.
Herman, I definitely see you nodding. The money's there, that you can guarantee.
Yeah, I think if I may add a bit in terms of what she just said, that there's access, and we cannot limit ourselves just to the sources in Africa. I think we can tap into other pools in Asia, Europe, and the US. But at the end of the day, it's up to us, the Africans, to make sure that the bride is dressed well.
Yes.
Okay, and that takes governance, that takes consistency in terms of policy reforms. Also, that takes reforming or restructuring the balance sheets of these entities, especially the state-owned enterprises. They will be able to access capital and debt financing, but not in the state they are in today. So a lot has got to do with restructuring the balance sheets, but also making sure that there's policy consistency all across, so that somebody knows that when they bring in their money from wherever they're coming from, there will be a good return, B, they'll be able to get their money out. So that is pretty critical, and I thought I should just add a bit in terms of what she highlighted.
Mike, I want to hear your thoughts on this particular one. South Africa, at least for much of Sub Saharan Africa, South Africa is the biggest investor in Sub Saharan Africa as an African country. And you definitely you understand this particular topic. As you mentioned, WBHO is invested in north of South Africa. And that begs the question, have you had some troubles in the past, maybe with capital controls in some of the countries that you are vested in? Like Herman is saying, that certainty when it comes to policy is very key here.
I think we are very careful, and that's why we've ended up working more on projects where we are certain of payment, and that's mainly around the mining sector and certain public-private sector contracts. But I think just talking about the other companies like Stefanuti Stocks or Raubex, they've spent huge amounts of effort and time getting into toll roads in Zambia, and those toll roads have had to be stopped from time to time because the funding didn't take place. And then then they wait maybe 3 months, 6 months, and it starts again. So that's not a good situation, because you've got all your plant and your capital, and it's really a very, so we would, until we're more certain, and I think we want more control when we move in over that payment. And when I think of Zambia, with all that copper south of the DRC coming down into Zambia and having to get transported, and all the those big areas where the trucks have to meet, and the railway lines that have to go from there, that will all be supported by the copper mines themselves, and of course funding agencies like DBSA or Standard Bank or Standard Chartered. So that's what we're looking for, and it's a pity we can't go beyond that when the countries really battle even to pay their whatever's required on these toll roads.
Zodwa, how essential is it to involve the private sector in many of these conversations, and even fostering infrastructure investment and development on the continent? Just the other day, I bring this up because the other day I was talking to a group of Zimbabweans who have started a crowdfunding initiative. And these are like 5 guys who came together and they said, you know what, we're going to build a road. And they're doing it, How essential is it for the private sector not to sit back and wait and just engage with you and kind of do their part?
It's very important. DBSA is also, some of the IPP projects that we have mentioned earlier on, and in other countries we support a privately sponsored project. But what we have even gone a step further, we are also trying to find ways where we can catalyze or try and leverage private sector capital into our projects by providing more subordinated structure as a DFI, because we have appetite to take a subordinated loan structure where the private sector can only have appetite to take the senior financing rather than the subordinated. We can also take the first loss. So those are the kind of the instrument, because at some point you realize that certain projects, especially if it's a greenfield project, right at the beginning of it, it's still a ramp-up phase. There will be some cash flow shortfalls. So what you do need is kind of a very patient capital, that will just await for the full ramp up to take place for the project to start repaying itself. The nature of a senior debt does not have that kind of an appetite. From get-go, they need to be repaid in their financing. So that's where the likes of the DFIs play a very critical role in ensuring that we subordinate ourselves to the senior debt tranche in order to catalyze the project to move forward. So that's where we see also the very, I mean, my colleagues have already indicated money is not a problem. That has been proven so many times.
Well, we'd love to hear that, don't we?
Money is not a problem. And this is why we've even gone to a step further by, Lizeka has touched on it a little bit, as a DFI where we have provided, or we provide what we call project prep facility, where we take early stage risk in the project, and in some projects, I mean, we have one project which is a social project per our definition, but it's run by a private doctor in Diepsloot as well as in Bramfisher. We've put in what we call our risk capital in there. If the project is proven bankable and viable, taken to scale, roll out to different provinces, by that time, private sector would have seen that the project is bankable and working, and they'll come on stream, and co-finance with the DBSA. So that's how we look at the private sector participation as a bank, by playing a very meaningful yet developmental role in a project.
Lizeka, let me bring it back to you. Diversification of financial options and instruments. Much of Sub-Saharan Africa, if you're not getting a loan from a bank, it's a loan. But of late, we're seeing the digital side come on. Mobile phones also changing the entire paradigm. And I bring this up because, at least in your space, agriculture and everything, futures, at least in the US, that's how they were formed. Someone betting on what could be in the future when the corn is ready. How do you see Africa adjusting itself, at least the southern part here that we are talking about, adjusting itself and diversifying the financial options for the future?
I think we're almost there. We're not yet there. And I want to link this to the whole fourth industrial revolution because there's linkages. So I think as a continent, we have to leapfrog. I don't think we should reinvent global technologies. We just need to domesticate them. So as the IDC, we are preoccupied, but we still are traditionally looking at our instruments that we do. For example, outside South Africa, we purely fund senior debt. But we do, in some instances, take direct equity, especially if we think it's linked to our strategic imperatives. But the crowding in or the crowdfunding is probably I don't want to say it's a threat, but I think as DFIs or even commercial lenders, it's something that we have to be aware of. Today, we might not see it as a huge threat, but there's probably a market that will come and actually partner with ourselves. So it's more for me about leveraging. We also see blended finance structures coming into place. And as the IDC, we want to leverage. The more we share the risk, the better it is for us. If you look also, perhaps it's not a funding instrument, more of a technology adoption in the agriculture space. The use of either artificial intelligence, drones will be important in terms of either the smart farming technologies as well. So it's really how you balance the two on how we see it as the IDC.
Mike, I want to pick your brain on this one, at least from what you're saying. Adoption and technology and the fourth industrial revolution, things that we hear almost every other day. I personally like leapfrogging, At times you listen to politicians say this stuff, and when it comes to applicability, it's another different deal. And I understand, at least construction space, you have to be in the thick of things. Just give us a sense of this.
Yes, sometimes you wonder if you're on the same planet. But so yeah, construction is
that's an intro, yeah.
Construction is a very basic thing, It's, we have to pay wages and plant and things every day, and we work at fine margins. We don't all have big balance sheets, so it's really got to be in place. But there are, there's more and more concessions. I'm just thinking in Zambia. We're doing a few solar projects, and there's quite a few going in Zambia, which is very encouraging. So at least that's going to get power to the various mines and to the various communities. And yes, on the rail and the toll roads and things like that, I think there's lots of prospects. A lot of the feasibilities have been done. They've been proven to be bankable, as I was saying earlier. So I think it just maybe needs some more coordination between all of us to make these things work, because we have lists and lists of projects throughout Africa. And obviously, south of the DRC is where we would prefer to be. But it's, our turnover in Africa has never been lower than it is today. It's about half what it was 5 years ago. Okay, that's partially because of the resources dropped off, but they're coming back now. So we should be at the bottom of the cycle, and I'm really hoping things do improve. But we've got to be realistic and, not just, it's not pie in the sky stuff. We've got to be dead serious and dead realistic, and let's hope we can do it.
Herman, institutional gaps and incapacities, something that the Africa Development Bank points at in their latest outlook for 2018 when it comes to issues that hinder the infrastructure, investment and development across the continent. And I'm thinking, how much of this do you actually see in your daily happenings when it comes to many of these projects that you find on your table every once in a while?
No, that's a good one, I think, to talk about what is causing the financing gap and why is it that governments cannot raise all the money while at the same time we sit here saying that the money is available. But before I talk about that, I thought I should add something on the adoption of technology.
Right.
And I think you may allow me to say that East Africa is leading the way. When you talk about some of the things that are being done, like the We Farm, bringing the smallholder farmers onto a network or creation of some orbits where they don't even need the internet, but they can depend on GSM to exchange information, to get market information, also to access support in terms of service from the agriculturists and stuff like that. But I think it's the use of harnessing of technology, both the GSM and the smartphone, that has actually taken the services that much closer and kind of closed the last mile of the delivery to the smallholder farmers. So we are bringing them into the connected sector, or the formal, as we have traditionally called it. And that, for me, improves financing, it improves sharing of information, it connects them to the market, but they also access inputs or information about inputs, and it's quite key. And now when you talk about Rwanda, where there's delivery of medicines and probably other things
drones,
using the drones, these are things that we can actually do without waiting for the West probably to bring their technology. But going back to the institutional vulnerabilities that we find in Africa, I think it's mainly the absorptive capacity of the governments. So funding will be there, but then launching a project where funds have been actually committed, it takes you 3 years. And where the government probably has got to come in and do their part in terms of acquisition of land in some of these countries, that may delay a project for 5 years. And of course, that increases the cost of the project, because when he's got plant that is being rolled out there, he will charge for it. And that increases the cost of infrastructure. So those institutional weaknesses, I think this is where governments can gain from technical assistance from the likes of the World Bank in terms of how they can increase the capacity to absorb even the investments, the investments that have been coming in. Otherwise they come in and then you have to pay interest on that, and projects will not be rolled out, which means that the benefits are also delayed that much further. So it beats the whole concept of funding the infrastructure.
It's very fascinating. I remember speaking to the Vice President for IATA for Africa, and he told me there's a West African airport that has been pending for 15 years. 15. And they kept on just procrastinating. No, now we need to do this. And I'm thinking, Mike, then definitely you have to change the wage bill in 15 years. It's definitely not going to be the same. But just maybe to bring it to Zodwa now, it's quite interesting when you hear examples coming out maybe of East Africa and things that are tangible, applicable. How essential is it for the likes of DBSA to develop African solutions for African problems, not having an escalator on a one-floor building?
Yeah, it's very important. Just to lash on the fourth industrial revolution, for instance, there's a project which is it's a project that you do need to have an appetite for early stage risk, which just taps on the existing technologies, but in this case, they are more on off-grid and they are also hybrid, just a combination of solar. They are all, IT platforms which are powered by solar, where there's cashless payment that he's
And
also
this is all
mentioned.
applicable,
It's
yes.
all Africa. You know, all it requires somebody to have a vision to support such structures at an early stage, because right now, because these technologies on an integrated platform have not been proven as viable, commercially viable. People will shy away. You won't have a commercial funding. This is why you need the likes of the DFIs who would have that big picture to leapfrog Africa into this fourth industrial revolution that you are talking about. So we are doing something in respect of that, except that it's still not at a scalable level as yet. But the point is, we've stopped the lip service business. We are actioning everything that we envisioned for this continent. So it's very important. So just maybe to lash on, you know, I mean, coming back to South Africa, something that you can also relate to. We're also considering some investments on BBI,
broadband
yes, Infraco, which is providing broadband to remote areas. And again, we're using the very same financial solutions that we've used in other areas that I've mentioned earlier on, where we are front-loading again budget allocation, because they need to roll out this infrastructure, the broadband, so that to enable accessibility to internet connectivity in the remote areas. And imagine the difference it will make in the lives of a student or a pupil who goes to just a rural school. Suddenly he has internet connection. Suddenly he has access to quality education, which is loaded on their tablet. Suddenly they have interactive board, which is loaded with high quality information. The difference that it will make is enormous. And it ties in very well with our development mandate as a bank, where we also need to look into developing the human capital aspect of it through education or e-learning. So it's very important. It's closer to our heart, the fourth industrial revolution, and supporting it.
Guys, we're running out of time. Lizeka, I want to ask you one last one before I get closing remarks from everyone. How terrified are you about the Chinese edging you out of your work? The Chinese getting the IDC out of business?
No, they're not.
No?
Not at all.
Friend or foe?
It's friends.
Okay, that's good to hear. That's good to hear. Guys, we're running out of time. Let me just get some closing remarks. Mike, let me start with you. This gap is very massive, 130 billion to 170 billion. If you look at our tax to GDP ratios, much of Sub Saharan Africa is just 13%, which is just astronomical by any standard. How much pressure are you feeling here, maybe as you sum it up, if at all governments do not even have the financing to start with?
I think, you know, if we could run the two, what we're talking about here with the fourth industrial revolution in parallel with providing basic infrastructure like roads and your silos and railway lines, ports, harbours. So, and I think we've got a big advantage now with all the broadband that's making communication a lot cheaper. I think if African countries could get their own construction industries better organised and better equipped, then the smaller contracts which revolve around social communities providing their, you know, looking after themselves would be there, then we as the bigger contractors could come in and just do the big projects like railway lines, ports, harbours, that sort of thing. So I think, you know, it could all work, and it's quite exciting to understand, because I think everybody is absolutely clear that if you want to increase productivity, you've got to have an efficient infrastructure. And productivity means increasing you know, poverty and all sorts of things. So it just creates opportunities. So I think that I believe Africa is 40% worse than any other Western country in terms of productivity because of this lack of infrastructure. But hopefully between the infrastructure and between the fourth industrial revolution, and if we can all put our heads together and get financing into this whole process, you know, hopefully there's going to be a good 20, 30 years of infrastructure and development of Africa. And South Africa will just carry on, you know, because we've done well.
Yeah. Zodwa, last word.
So again, you know, whilst we talk infrastructure in terms of brick and mortar, but also we need to be mindful. I'm sure by now you have realized that I'm very passionate about education. So we also need to just focus on that as well to leapfrog the human development. Productivity, by the way, yes, it relies on infrastructure, but again, level of education. There's been studies. South Africa, if we were to analyze South Africa as a country, our level of education is very low, and as a result, it does impact on the productivity level of the economy. So it's very important.
Lizeka?
Let me bring it home. Our president announced the stimulus package. We think infrastructure is really at the key of that. Without infrastructure, I don't think this economy is going to recover.
Herman, we do know the African Development Bank President, Akinwumi Adesina, is big on infrastructure with his priority issues. And where does the likes of Standard Chartered fit into this picture of his, at least in the next 5 to 10 years?
I think we're playing our role in terms of crowding in investments. We use, as Standard Chartered Bank, we use our network that we have. We're big in Asia, we're big in Africa, definitely, and in most of the markets we've been there for more than 100 years. So that knowledge is pretty important to work with the governments. We do ratings advisory for several governments, more specifically for Zambia. But most importantly, I think our role starts with advisory, because when you look at the amount of money that is required into infrastructure development, there's just so much. For instance, in 2019, the government of Zambia is only putting about $1 billion, and most of which is going towards servicing of debt. So we think that it's important, through the public-private partnership, having the legislative pieces in place to make sure that then more investors are able to come and bring in their money. But also, most importantly, is what we talked about previously. When we talk about infrastructure, I think we are drawn to the traditional infrastructure.
Yes.
I think we need to get on to the Internet of Things, making sure that there's more strategic investments into fiber optic, laying out fiber optic cables all across. And then a lot of these other things actually will be coming along. And the cost of production, the cost of wheeling power, the cost of access to the internet, everything will be coming down, and a lot more people will be drawn into the connected sector. So I think for me, we can work on the sustainable growth, but if we're going to look for leapfrogging or the exponential growth, there has to be the harnessing of the capabilities that have come with technology. And as Standard Chartered Bank would want to lead on that, and you may have heard that we've got an internet-only or an online-only bank that has been rolled out in Cote d'Ivoire, and this is going to be rolled out in other countries because of the recognition of the power of the internet and the capabilities that we can bring to the table.
Without a doubt, that is definitely the future of infrastructure, if you ask me, and maybe just changing our mindset, like the panelists, all of you are saying, away from just traditional rails and dams and roads. Ladies and gentlemen, many thanks for making time to speak to us. That's where we'll leave it for this edition of Apala in South Africa. Many thanks to my panelists, Mrs. Zodwa Mbele, Group Executive for Transacting at DBSA. Right next to her, Herman Kasekende, Managing Director and Chief Executive Officer at Standard Chartered Zambia. Right next to him on his right, Mike Wylie, Chairman of WBHO, and to my extreme right, Ms. Lizeka Matshekga, who is the Agro, Infrastructure and New Industries at IDC. That's where we'll leave it for this edition of Apala in South Africa. I'm Arnold Sagawa. Do join me for closing bell, South Africa. That's at 4 p.m. For now, have a good afternoon.